Finance Bros. Man, we're here today. Listen, so last week I was talking trash about the Fed, and what I said was don't talk about it, be about it, right? Give us something we can actually sink our teeth into. Don't tell us that you're going to do something 6 months down the road. We want to see like actionable things that we can take today. So guess what happened now? So now the conversation is that in November something happened. Home home building rates completely increased compared to the last 6 months. There's a significant amount of growth that's happened. And so today we're going to have a conversation with two brothers of the channel, the Intentional Millionaire and Perry and Likely. Both of them are real estate investors. We're going to talk about how they see the climate, the real estate climate right now, and what we can really expect to actually take place prior to the actual rate decreases that are going to take place out here in the marketplace. So without further ado, I am going to bring up our first guest and brother to the channel, Perry Unlikely. Salute, Perry.
Yo, salute, man. How's it going?
Man, I'm doing good. I'm doing good. So what you think, man? Do you think it's a real thing out here? So they're saying that the housing build rate is increased, right?
Yeah.
So what do you think that they want us to really take from this situation?
Yeah, so I find it interesting that it's increased. Well, I just find it interesting that the data's come so quickly, right? I mean, we just now started to see it ease up some. So I don't know, is it more marketing? Is it more marketing on that side? Because I've got to imagine it's not been enough time for them to react to it really yet. So to me, it's almost like they've probably been building the same because, like I said, there's been a shortage regardless. So to me, it sounds like they've been building the same rate anyway, but now they're advertising it to get people excited and try to drum up something. It just, to me, doesn't feel like everything is adding up exactly. So I think it's interesting. I do think it's interesting, and I do think still, while there is a shortage, at these prices right now, and not exactly knowing what's going to happen, I do think it could be somewhat of a gamble. But the market is going to be driven off of sentiment, and of course, when the Fed, you start to hear the talks of 2024 quantitative easing coming. That's what gets it going again, and maybe that's what the builders are going based off of. I think it's dangerous because you can't trust what the Fed's going to do, but that's kind of my thoughts on it.
Oh man, okay, that's Perry's take. So next we have the Intentional Millionaire, who's also an investor. He's also out here in these real estate streets. So we want to hear what he has to say about this matter. What you say, Tim? How's it going,
What
man?
is going on, Sim and Company? How's everyone doing? How's it going, Perry?
Salute, doing good.
Well, I think this is a very interesting topic. I think that one, I question if some of these builders is still moving forward because they have pre-existing contracts for this year that they still had to build. That's one. Then two, I think that it's going to be a lot more pressure on some of the builders and the buyers because the simple fact of the cost of goods and materials is up. The inventory for materials is still lacking in certain areas. So I think with those two dynamics, I think it's going to be a little bit more pressure than need be. But it's going to be interesting to see how this all going to play out with all on top of the Feds dropping the rates, looking to drop rates. So is that really going to push people to get back to buying at the extent that they're predicting, one, but also two, is it going to put the builders in a peculiar spot that they get antsy and now they start to sell some of the properties a little bit lower than what they had expectations on. So it's an interesting dynamic.
Yeah, man. So it's like it almost is like, you imagine your parent telling you that they're gonna buy you a PS5. They're telling you in June, but they're telling you they're gonna buy it for you for Christmas, right?
Stop the cap.
Listen, you have to make it there first before we can actually see it. Listen, I won't believe you until I actually see the box under the tree and I'm peeling the paper off. If I'm not experiencing those things, because I don't know about you guys, but if you've ever experienced your parent telling you that they're going to do something, and then when it's time for them to actually do it, they say, oh, well, this happened and that happened. So what's to keep the Fed from actually saying to us, we know what we promised you guys, but the way that this situation has worked out hasn't really yielded us an opportunity. What do you guys think that the likelihood of something like that taking place is?
That's tough, man. And I'm such a I hate to be I'm pessimistic, right? about the whole thing, man. I'm just pessimistic about the whole thing. And I do want to before I lose my train of thought, I do want to touch on something that Intentional said real quick that I had not thought about was when he talked about those existing contracts. I would almost bet that is the largest piece of it. Because what we've been dealing with, there's no way that these that contracts were continuing, right? We didn't know where things were going. So to me, the likelihood that these are like new contracts and stuff, it's hard for me to think that. But what I will say, and everything, we always say this, right? Real estate is local. I go right up the street and I see a piece of land cleared off that they're about to put houses up on. Now that could still be existing contracts as Tim spoke to, but yeah, man, just the whole thing reeks to me, man. I don't trust it, man. It's just not adding up. The sentiment, it just overall feels like, the business of the narrative, right? Like it's trying to push something. So I'm not comfortable with it.
What you think, Tim? You think that we can trust what they're saying, man?
That's a good question. I would say no. And the biggest reason I would say no is because one, we're in a political dynamic right now. So anything's likely to happen and anything is possible I think everything is possible for change. Definitely coming up on the next presidential run is going to be coming up. That's one. I also think one of the things we also have to think about and not lose sight of is the fact that some of these builders may have got some specialized type of product or deal that may be different. So they may have still had a little bit of cushion for when we was in a situation where the inflation was pretty high. So I think that may be something to also think about. But also I think that the promises that we're getting, I think we getting some of the story, but not all of the story. I think there's a lot of stuff that's happening in the back scenes that's not really hitting the media because it's not attention enough, or they don't want to paint the picture to show you what's really going on. And I'll leave it as that.
Yeah.
I can see that, Tim. I can see that. I can see that being the case. So just to kind of go back to what you said, and I want to say this right here. So salute to Peter Investor M. Appreciate you for coming through. Is this considered to be lagging data or real-time data, right? That's a real good question. So I'm going to share with you where this sentiment is actually really rooted in. It's rooted in this right here. It's rooted in the understanding that we are going through a situation where the Census Bureau has recorded that housing rose by 9% from last year, right? and primarily because there's been an 18% increase in starts on the single family side of business, right? They're saying that housing starts are measured in rates that are multiplied by 12 with additional adjustments applied to show how many houses would be built if construction continued at the pace for an entire year, right? At the November time period, companies would have built about 1.3 single family homes, right? And 1.56 homes overall. That's what the Census Bureau says, but it says economists expected a lower rate of 1.36 total homes. So to just go back to it, it's just more so saying that the Census Bureau is the metric by which they're actually doing these measurements. And they're saying that they've went above what they were expecting them to actually contribute towards the housing market. But I don't know, man. I think that just seems too convenient. If this had been information that was shared before the rate cut promises were made, it'd be a completely different conversation. But now this just seems like confirmation bias, right? So it's just more information that's going to confirm more of what was announced last week in order for for confidence to be increased, in order for people to have a willingness to kind of go down and subject themselves to the current mortgage rates, and with the hopes of potentially being able to refi down the road. What do you guys think about that ideology?
Yeah, I think a lot of it is, yeah, like if you can ease people into let's say optimism, right? And one thing we got to always remember, man, as we adapt, right? We adapt to things, whether we want to, a lot of us like to act like we won't or we can't, but we slowly get lulled into adaptation. So I think part of it is, right, as to me, it's almost like, a 5% mortgage rate is going to be the new norm, and just high cost, the high cost of housing is going to be a new thing, and people are going to figure it out. But the thing to remember is the market, it still will always be supply and demand. So that's the thing that people can rest assured on, can be confident in is, let's just say, man, people won't be able to afford homes. Okay, well, if they can't, the price will come down. No matter what, it'll have to. That's the way that it works. It's always going to be supply and demand. So the only reason at the end of the day housing will keep going up is if people keep buying it. That's where your conversation, Sim, is important that we had, I think it was last week, about should Wall Street be in housing? They can afford to pay whatever. That's where there is a danger. But for the common person, if people can't afford the homes, they will drop. That's the way it works. That'll never change, right? So I think that's what we have to be. That's the positive part, but I believe that is also the reason why they're trying to sell a dream. Because Americans who live off of debt, and most of the world does, if you sell them a dream, they'll go and get something they can't afford anyway. And we already know most people have that financial issues, and you can sell them a dream and they'll keep it going. So that's my thoughts on that.
Yeah. So what you say, Tim? I mean, what's your thought on that, man? They're just saying that this is based upon them having more than expected as far as the supply out there in the marketplace. Does this really constitute an increase in housing construction in your eyes?
I think my answer is going to be a little bit different. I think it's just a bunch of confusion to distract from the bigger issue. And the bigger issue is mortgage applications, going back to what Perry said. I think supply and demand is, that's always going to be the foundation of real estate. And I think the key problem is, even if they have the supply, they don't have the demand because the qualifications are a little bit more steeper. And you have the younger generations that's not buying houses now. So I think this is just, it's a smoke screen, but also a distraction from the bigger issue. in my opinion.
And to your point, let's not forget, never underestimate what the government will do. They will loosen up the restrictions. They will do whatever it takes. Someone will come in office and loosen it up. And once again, Tom and Jerry will be able to get a house. And that's what will happen. I mean, that's what it's happened before. And we're always going back and forth, right? You know, you got Dodd-Frank laws, right? I believe, if I'm correct, I think Trump loosened some of those back up to begin with. And so we'll always see, it isn't even Trump specific, but just politically, we'll see a sway back and forth, right? And Trump is a real estate guy, so it made sense. And then you see some of those starting to tighten back up. So there'll always be a tug and pull. But at the end of the day, to sell the dream, the government's going to do whatever it takes to sell that dream. Because we always say this, everybody deserves a home. Dude ain't worked in 50 years and we say he deserves a home. That's selling the dream. You know, no qualifications of, like, we could at least say everyone who works for it. Like, at least say who works for it. Nope, everybody deserves a home. Regardless of what you do, you deserve a home. That's more of selling that dream. And to me, putting out little tidbits of information like that is the beginning of the works of selling that dream again. That's the beginning of it. It's starting to sell the dream again.
Hey, come one, come all. You know, that's what they're saying.
Yep.
Santa's here. Santa's early.
Yep. Absolutely. Absolutely.
So they're saying that this could be good news. Housing demand has been overwhelmingly strong since the pandemic, right? But as more millennials, like you said, Perry, millennials have started families and more people are able to do their jobs remotely. The supply has tightened, right? The pandemic disrupted the supply chain, slowed down construction. But after that, the mortgage rates began to spike, which made people more reluctant to spend all that money. All of that contributed to the demand of the newly built homes. But I mean, they're kind of trying to give a narrative, but it's still not rooted in like the honest truth. It's that we had quantitative easing that was happening during the pandemic where everybody, you know, they were doing the Oprah thing, you know, you get $1,000, you get $1,000, you get $1,000. And they're just printing out all this money with the hopes that people are going to go out there and infuse it into the economy. But who's going to have to pay for that, you know? Like, we're going to have to pay for that on the back end. It's not like it's just like free money.
Right.
It's money that comes at a cost. The question is, are you willing to pay it, right? So this is what the guys are saying, right? So now I saw something here that's kind of interesting. So in you guys' opinion, they said Lawrence Yun, he's the chief economist for the National Association for Realtors. He noted that home sales had risen this year because of incentives from builders and agents. And even with the increase in November, construction would have to increase even further in order for it to meet demand. This is exactly what you were just talking about, Perry, right? Like, to be able to meet the demand, even someone from the NAR is saying themselves, hey, we might not have enough out here for us to actually legitimately say this is a buyer's market. This genuinely could be a situation where we're just kind of putting out fillers out there. We want people to know that in the last 20 years, this is the highest it's ever been. In the last 20 years, that 8% is what it's been, is the highest it's been right here in October. So you guys should just be happy that we're increasing the supply with the hopes that it's going to allow you guys to participate in this marketplace. But even someone who's biased from the National Association of Realtors is saying, I don't know yet. I don't know if it's enough, you know? So if the National Association of Realtors is saying it, and they have something to gain from the narrative being changed, what does that say to you guys about what's really taking place? Now, Tim, it sounds to me like you might have a little bit of background information about what might be taking place, about the narrative that they want us to know. What is your take on this? We'll go to Tim this time.
Well, I think you just shared it right there, because that's what I was going to say next, was they need to pull data from people that's got boots to the ground. In this case, you just mentioned the realtors, and that's a good place to start. But also, we need data based off of the builders. What does the builders actually say? Because the person that controls the data, in this case, the Census Bureau, they're going to put out what sounds good. I just hate to say it. And then also, too, you got to remember, because sometime with data is good from a theoretical perspective, but you still need the application to match the data with real-time application. So real-time application in this case would be your builders, would be your realtors. Those are the type people, would be some of your mortgage, your lending companies. That's the real-time application with the data. So that's what I would say.
But what kind of data are you talking about, Tim? Because here's some data right here in reference to the builders. Is this the type of data you're talking about? Right here, it says the builders, Lennar Homes, right? It says investors seem optimistic about demand for home construction as well, right? As many leading builders are outperforming the broader stock market. It says Lennar has rallied up 67% in the last 12 months. Pulte has soared 130%, and NVR is up 50%. Is this the type of data that you're talking about, where their stock values going up, or is it something different that you're referring to?
Well, I'm talking about data as far as their building and their projections. So that's just giving a roundabout number for that particular company, but let's base it across the board in the areas that you see in the biggest growth or you're seeing the biggest downturns. Where's that data at? Where's the data at that shows, okay, we had this builder, they started X project, they started building the beginning of the year, they finished the end of this year, they finished in November per se. How many of those houses that they built or projects that they completed, how many people was they able to get into those projects? Did they run into any actual issues? That's what I mean by real-time data.
Yeah, I mean, what do you think, Perry? What do you think about his take, man? Oh, you muted.
All right, my bad. Run that by me one more time. My bad.
So essentially, Tim is saying that the builders need to provide some data, right? We can't just count on one thing coming from the Census Bureau. It needs to come from the builders, the people who are actually really the most important part of the transaction, in theory, because they really have like the hard asset that they're supposed to provide to the homeowners, right? So they are literally like the bottleneck at this point in time. So if they're the bottleneck, Tim is saying we shouldn't be satisfied with stock data right here. He's saying that this is not good enough information. He's saying that what we need to hear is we need to hear exactly the things that they're experiencing as it specifically pertains to the construction process and how they've improved it and where they made changes in order for them to satisfy even the moderate demand that we have at this point in time. Because if they can't handle lower demand, and I mean, to me, it doesn't really make sense. They weren't able to handle the demand that they had before. And like in Tim's defense, it was taking like 6 months, 9 months in order for you to close. So for you to say housing increased in November, so you're talking about March numbers over here. I mean, if worst case scenario, like we're talking about people who went under contract in March and they're actually going to close in November.
Right.
That's a real thing.
So I really think, I've said it multiple times. I think the data is trash. I don't trust it. I think what we really need the data from everywhere, right? It's like a puzzle. How many loan applications are taking place, right? And let me explain this real quick, because this is an example of something I came across today, and I didn't have enough information to explain it. It was acceptance rates. It was college acceptance rates, and it showed different. It showed basically different conferences. So I was focused on the SEC, for example, but we can look at some data, for example, when we hear Harvard, and I think Harvard's was like maybe 3.7 or something, or like 2, it was very low, their acceptance rate. Well, we already know there's tons of applications going in, right? Harvard has the pick of who they want, right? And then more specific to the SEC, I noticed something that said, hey, this school is 43%, this school's 80%. Now, I know these both to be good, good schools, but here's the deal. Without having any details, it's very hard to understand how one school, right, their acceptance rate is double. It makes you think, hey, they'd let anybody in. But you got to have the factors. Okay, how many students are they? How many freshmen did you take in? There's just I'm making that point to say there's so many pieces of data we don't have. It's really hard to get to the bottom of it. So I think you've got to look at, okay, you really would want to look at with housing in a particular area. How many houses currently are there? Just to begin with, how many houses do we have? How many, you got to find out what the demand is. So that's one piece of it. And I think you got to look at days on market. That's something that realtors are always looking at, the days on market, to see how long they're lasting. Because if you see something that says, hey, days on market is higher than ever, but yet they're feeding us something that says, the demand is crazy, something's not, and the supply is low, something's not adding up. So I think really we got to take all these pieces and put them together to get down to the bottom of what it is. But I do think the builders, need to provide real data on what's going on, not just one piece of it. Because you best believe all these articles that we see, they're many times, where are they coming from? The mortgage side of things, right? They're coming from different places, and there's a reason why they are. So you got to see, you've got to get the big picture. And I think what you'll see is, if you saw a mortgage lender do an article on housing supply, a realtor do one, a builder do one, they're going to tell you different stories. They're going to all tell you different things from different vantage points. But I think the builder is the source, though. The builder will tell you a lot.
Yeah, but if the builder is concerned about their valuation on the stock market, are they really going to speak to the pain points? Are they going to tell us, hey guys, listen, the supply chain issues we were having, earlier this year, they've been resolved, and so now you guys can count on us to be able to go ahead and deliver home production values pre-pandemic at a pre-pandemic rate, Like, are they going to really say that if that's not the case, or are they going to just try to make sure that we have some sort of confidence in their abilities? Because I'm looking at an article here from November that said something very, very similar to what we're hearing now, where it's saying, hey, housing rates increased by a value of 0.2%, I think that with what you guys were saying, the numbers can tell whatever story we want them to tell, for real. Now, we have to really see both the builders and the people who are moving in, those rates right there, and how many of those people can actually genuinely say, hey, like, we weren't rushed into this home. The home, whenever we received it, they did all the repairs, and they were able to really satisfy our asks prior to us actually moving in. But I've seen a lot of builders, they'll tell the people, hey, listen, we'll catch up with you in 30 days. You just go ahead and give us a list of all your issues that you're having. We're going to have a meeting in 30 days, and we're going to address them. But even in that same vein, they'll have an issue with really you pointing out the things that they didn't resolve, even if they were on the inspector's list, even if they were things that they already were well aware of, but they still didn't really resolve them, So I think that it's really interesting, and you guys really present some really good points on this matter right here. I don't even know.
And then I want to add this too, because the builders that they mentioned that they offering the stocks is up. We got to remember their business model may not just be building, so that's not a good indication. Right. Their business itself may have other services, that they could have another branch that's really the driving force for them, their stock going up. It may not necessarily be the building division or the building part brand of their business model. So I just wanted to mention that.
Yeah, that's a really good point, because without knowing the bulk of their business, what it's fed by, yeah, you could say that your rates rallied 67%, and then last month soared 130%, and then you were up 50%. But what is that number really rooted in? Like, what is the real source of that? Is it the fact that you improved production by 67%, hence why your stock value went up 67%? Like, what is it that you're really saying? And like you said, Tim, there's power for these companies and these organizations to be as vague as possible, because the more vague it is, the less that you have to really explain, and potentially the higher likelihood of confidence being really expressed out there in the marketplace overall. So, do you guys think that we have a buyer's market anywhere close to us right now?
Nope, I don't.
I don't think so.
Nah,
Buyers are going to get screwed. They're going to get screwed if they don't understand what they're doing. That's for sure.
It's a real thing. It's a real thing, because people were already talking about it right now, that they can't get the valuation. The valuation does not meet the amount of money that they owe. Doesn't that mean that people are going to be upside down on their loans?
Well, yeah, and let me, because I think this is good, because we talked before the stream, right? The numbers I was giving you guys before the stream, and this is with having a lot of equity, and being able to take that and move on and not really have any issues. And so I've got to think, and maybe I'm fiscally more, maybe I'm more conservative than the average person. I don't really know, but in terms of fiscally. But my thing is if I'm still thinking about it, then the average person, it's a problem, man. It's a problem. So that's why I say just the average person thinking about, hey, I'm gonna go get a house. Yeah, man. I've got to think they've got to be selling a dream. For the average person right now to believe they just gonna go out and get a house, somebody sold them a dream.
So Perry, in your eyes, given the current climate that we have right now, what kind of circumstance would need to be in place in order for somebody to upgrade in house right now?
So here's I think there's different. Okay, well, never mind. You said upgrade in house, so that's perfect. For me, when you talk about upgrade in house, it means you already have one. So to me, what that's saying is, now it does depend on when you bought it, right? If you did buy it if you bought it at the tail end, because I think there's different stages. If you bought it at the tail end of when things, I'd say pandemic to now, if you bought it and you bought just really, really good, I do think, I think there's an opportunity, although the interest has risen. If we were talking about buying at 4.5, maybe we'll say 4, somewhere around there. Depending, it might make sense if you want to upgrade where it's not that crazy, right? Just depending on when it really started to move quickly, and if you bought really, really good. Because you still got to try to, even though the rates have went up, you still got to try to find, you kind of, there's going to be downside either way, in my opinion. So you just got to kind of pick and choose. But if you're looking at when you bought it in like 2010, 2012, that's a hard sell. It's such a hard sell because we're talking about interest rates, sub 3% interest rates. So you're basically, and it depends on the market, but you're trading off a home that's grown all this equity, probably doubled, right? You're taking that and you're just moving it over somewhere, probably not getting much more right now. Maybe it's almost like you're getting the same value. You're getting a newer home that may look it looks more modern, but it's the same size. You'd be better off just upgrading it yourself, the one you live in, and then you're going to actually add some value to it, right? But to go make that switch, what you've done is I've doubled the payment. If we're talking like you got it 2012, even 2016, I mean, just the interest rates, right? I'm doubling the payment. Taxes have went up. There's no positive to it to me at all.
No positive.
The only reason you would do it is because you literally just have money, and I would say someone that I would say it does not really a big deal to is someone walking into it, and yes, they're still walking into a situation that's not quite as positive as what they're in, but they can say, well, it's only it's within that 28. It's 28% of my as far as your what is it, debt to income ratio.
Okay.
28%. Okay, then I what can I say to you? It's still negative compared to where you're at, but at least your finances are in order and you're going by a standard that you would have been told to always go by. Those are the people I would say do what you want because you're staying within that standard. Anyone else, you're taking an L. There's just no way where it's positive, in my opinion.
Tim, what you take, man? What kind of situation would make sense in this climate for somebody to upgrade in house? What would it have to look like in your opinion?
I think Perry just covered it. I mean, I don't really have nothing to add to that. It has to make sense for your scenario, and I think it's only a limited few that have the resources, they can afford it, that it's going to make sense. Because I think the key takeaway for me is just adding to what Perry already stated is you have to make sure that the numbers make sense and you understand the total upfront cost. And I think that is the key. Because it's not going to be an emotional buy. It absolutely have to be based on what the numbers make sense and what is your particular strategy. If the numbers don't make sense and you don't have a strategy, you absolutely should not buy.
And let me say this real quick. Now, it'd be real easy, right, for me to say, because I've been through this with myself, right? It's real easy for me to say, my kids need the best schooling, and they do. I really believe that. But when you sit back and read, and that's how people will go and spend more than they should. But the truth is, what I know is well, if it makes sense, that's what I'll do. But I also know, let's say it's not bad, it's not like that, but let's say my kids were in a school that was rated a 2, right? Just not good. Okay. I know that I believe in that case, okay, I'm better off financially rather than going and doing something that doesn't make sense financially. That just hurts us both. That doesn't provide, even if they get the good schooling, they don't get a scholarship, then the price of college at that time could be $200,000 per each of them. I know that I'm better off, right, in that instance saying, okay, school system's not good. Where can I kick in to make sure that they know everything they can and they can test into anything? So I know that better than going out and ruining myself financially, it'd be for me to, whether it's tutoring, whatever the case, to uplift and make sure they have what they need. And then at the end of the day, when it comes to apply that, I can afford to give them the best secondary education they need. You got to think about things practical, as where people want to sell themselves on, no, they just got to be in this school, and it doesn't matter if I got to spend $500,000 on private education or go spend all this money on a house that I can't afford. So you have to make the right decisions, and that's where financially, in the past, we have not done that. Hey, go get that paper. Doesn't matter how much you spend. And you go and get it. And you know what I'm saying? You spend $150,000 and you make $32,000 a year and you're done. Unless you got thick skin and you can bounce back and you're a go-getter, you're done. You're cooked. So I think people really have to start thinking about why they want to move. It's got to be why I need more space. You got 300 more square foot, better go to Costco and get you one of them little sheds. We really, I say that jokingly, but people really got to start thinking about why. And I think you do have to ask at this point, and this is the first time I've really thought this, and this is just present day. This could change next week. They say, well, a home, you need to own a home. That's better than renting. Maybe it's not. If you already have a home, Yes, probably is. But if you don't, maybe not. You may be better off renting, depending on the scenario, and then keeping yourself in good shape financially and investing. And then you may have to find new ways like, okay, we're going to invest in this thing and flip it. And instead of flipping it to somebody else, we're going to live in it. Like the idea, I think it's reaching a point where like those who really want a home got to get creative, not just going out and buying whatever at whatever price. You find something and you fix it up and you find ways to get in a home at the right way. That's where I think we're at right now, unless things change in the market.
Yeah, I mean, with this sort of climate, what's the likelihood of somebody finding someone willing to actually sell their property in order for you to be able to tear it down and then build it back up, with the house of your choice, the McMansion or whatever, Like, what's the likelihood of something like that happening? Now, I've seen something like that recently, and I don't
That's
know how the transaction went down, but I've seen an environment where someone sold a house in the neighborhood I'm in, and they bought a house around the corner, same school district. They built one from the ground up, and there was a price difference of about 200,000 between the two houses. So if they were doing something along those lines, maybe 700 to 900 or 700 to a million, at what point would it really make sense if you're building it from the ground up, based upon you guys' experience?
well, first thing to that comment, that's not the norm. I mean, let's be
Right.
honest. That's just not the norm. That's for 9 times out of 10, somebody that's a little bit more seasoned, they prepared for whatever comes after that. Because most people, they just don't have the financial backup, understanding. They don't have all the things that's required to be able to do something like that. So I think that's a more of a exception, not necessarily the rule. That's what I would say. I just think that's not really the rule.
Yeah, I agree with that. I do I do agree with that. There's that is on the extreme side. But also the average home buyer wanting to do any work is not honestly likely. But here's the deal: when drastic times call for drastic measures. So if you want a house, you'll either do it or you won't get one. I think it's coming to that. But also on that, we got to be careful because here's the thing: a tear down, you're not going to be able to get one anyway. You got to be able to afford a tear down, and you can't get no conventional loan with a tear down. So that's the problem. So you got to have so people who can afford to tear down, they can afford to a lot of them. If we're not talking like business wise, just do it for themselves. They got bread anyway. They could probably just go buy whatever, right? So that's the other thing. So that's why Tim says it's not really
Right.
it's not really typical.
On top of you need the infrastructure from the agent perspective that's also has some specialty in that department also. So I just think that's your elite of the elite doing that type stuff, in my opinion.
Man, if you broke, just
Right.
say you broke, huh?
Right. Yeah.
Jaden has $1 bill, 1 quarter, and 2 pennies. How much money does he have? Jaden broke.
Yeah,
That was pretty good.
Mhm.
Jay
Yeah,
is
that was good. That was good.
yo, the math ain't mathing, man.
Yep.
What do we have in the house, man? So yeah, salute to Peter Investor M. Appreciate you coming through. And what does Peter say? He says lagging data is one. By the time you get hold of it, right, it's obsolete, right? Real time data is more tangible, something you can actually um, that can affect you right now, right? Which is really true, man. Like it doesn't even matter for us to talk about like data that's like 8 months old because it's not applicable right now, man. Like those people who committed to buying houses today, it's a high likelihood they at least committed to buying the home 6 months ago. So we cannot talk about home production rates today based upon old news. Salute to Owner Spot Live. Appreciate you coming through. You know, Owner Spot is a fellow real estate professional, and so I'm sure she's loving this conversation. What do you think? Do you feel like there's any confidence in this news that we have with the builders building more on the spot? She says children are expensive. Man, what you talking about? Listen, I heard that they say that it's $300,000 to raise a child. I'm convinced it's a little bit more than that, man. I mean, not to even include the pain and suffering that comes with the whole process. It's like it's real money that's associated with it. So any man or any person out there that's hesitant about the decision to actually have a child and wants to be in a good situation, man, I think it is a good thing because, man, you running around with a gun to your head when you're just stumbling through and hoping that it works out, man. It's just not a good situation. What did she say? True, but if the person actually invests, right? I think she's talking about the person who buys the house and decides that they want to go into another house, you know. So salute to everyone that's come through. We have Yasa is here, and we also have Caramel Drip coming through. So we appreciate y'all coming through. What do you guys think, man? You know, like I think that when it comes down to it, there's only really one thing we should really understand is that
Jaden has $1 bill, 1 quarter, and 2 pennies. How much money does he have? Jaden broke.
Look, that's good, man. I'll tell you this: if I was 20, I would change my approach completely. My approach would be, I'm living in whatever is flippable until I'm 40. I'm 20 years of living in whatever I can flip anywhere, basically, that I can continue to flip for 20 years. That's just the way I'm doing it.
wow.
Or until I mean, those are things, or until you get married, right? And if you have to hold off on that, then that's what you do. I just think you have to consider there's a different way to go to war now, is what I'm saying. Now, people were doing this years ago, and those people are really well off now. And that was a simple investing strategy. Now, I'm not even calling it that. I'm calling it a survival strategy for a lot of people. Because to have something, I just don't think this thing of, going and grabbing the home, the white picket fence, all that is just, nah. You got to strategize your way up to that is what you got to do now. Like, where you used to just work and you get our forever home. Nah, you might have to do 4 or 5 flips to get to the forever home. And I wouldn't suggest that. I would suggest about 10 flips. You got that forever home and you got some other bread on top of that. It's just got to be new strategies now. And that may change, right? The market may change, and we may not feel this way a year from now. We could very well be back to where, times look different. But the reason I don't foresee that is because quantitative easing, guess what? The market's going to be going nuts. And what do people do when the market goes nuts? They start spending like fools. And then they're going to try to slow it down again. It's just a yo-yo. It's a yo-yo. It's a yo-yo with stuff caught on the line with sludge on it. It's just like going down slowly, comes back up slowly. We've got a real problem.
I think, Perry, you hit that one out the park, because that's the whole goal. At least when I got into real estate, was you get enough properties that your investment portfolio pays for your dream home.
Yep.
And I think you nailed that one out the park. So I'm not gonna add anything else to that. That was mic drop.
Yeah, man. I think that's the way we have to look at stuff now, man. I think that's really where we're at. And I really think about it. It's funny, like, once again, because we were talking, right? If we took our home now, turn it into an investment property, took the other properties we have, and just said, okay, we're starting from scratch, it would pay our mortgage. We'd be at square one, really good jobs, but the investment properties are paying for the mortgage on a new home and we're flat, we're flat even. That's not a bad place to be ultimately, right? So that's and that's through several years of buying, and that's also having a home buying at the right time, right? A home in 2012 when people wouldn't touch a home, right? So there's a lot of elements in there. And then the other piece I just want to make sure people know, a lot of this is not a lot of it what we attribute to just being smart, doing this and that. Some of it, and it even applies to housing, it really is time in the market. Because what I can assure you is no matter what happens 20 years from now, regardless of what the market looks like today, the homes are going to be worth more 20 years from now. So that's something to remember. So this idea of just, I'll wait it out a long time, you don't know, because it ain't going down overall. So that's something to remember as well. And just by simply allowing yourself to be in the market over a long time, that's where you have these opportunities start to pay off. You got to be in it. So there's people that have been sitting on the sidelines since 2010 on buying a home, and now they can't get one. So that's something important to point out.
Yeah, where they say time in the market is better than timing the market. That's what they say in the stock investing space as well. So, yeah,
Right.
that's a really good point. So, let's see what the chat says. It's Peter Investor M says, "Don't do it unless you're ready." For real, right?
Yeah,
And
absolutely.
it makes absolute sense. Their hesitation is understandable. I'll be hesitant too. So it doesn't make sense to. I mean, I don't know if it's FOMO, but it's a tough situation. You're stuck between you've been renting for a long time and you want to be a homeowner. So now you go into a really, really tough situation with you being optimistic about the likelihood of you being able to lower your interest rate down the road. But I mean, I say that the people who had an opportunity to refi at 2.75 or something along those lines during the pandemic, to me, those were people like you were talking about, Perry, people who already had the property and now they were just pivoting from their current situation to maybe a potentially sweeter position, but they had to resist the temptation for them to actually sell, because in selling, then they put themselves out there to the wolves. Now they
Mhm.
now they become the victim of the marketplace, as opposed to just potentially, okay, there's a little sweet spot I can capitalize right here. Let me find myself in a better situation without really taking out too much in the new rate. I don't know, man. But the question is, do people have enough discipline for them to resist the offers that were happening out there with like I said, the listing agents? This house went in 50,000 over ask. This house went 20,000 over ask. Can the people actually resist the desire for them to sell with hopes of their house going massively over the asking price? And like you guys said before, there's a small part of the population that actually can legitimately do that. And there's power in being able to actually, like Caramel Drip said here, right here. There's power in you being able to be hesitant about your actions, because in your hesitation, you potentially have an opportunity to kind of ride this thing through in the sweetest possible spot available. What do you guys think about something like that?
I think the key takeaway from all of this really is, like Perry mentioned, it's time in the market. But I think people really have to understand right now is the time for preparation. You need to be prepared when it's time to make the jump, and not wait till the jump come. You can't make it because you didn't do a great job preparing. So I think the key right now for everyone listening, people that's out there, get yourself prepared. So when you're ready to make the jump, you can make a conscious, strategic jump, and not a jump out of survival mode or not a jump out of scarcity. And I think that's the big difference.
Yeah,
What do you say, Perry?
I love that. You know what's funny now that I really think about it, I think the most important thing right now, would be, I think this is where our friend Dave Ramsey comes up. I believe, if you're, this is today, right? Like I said, things can always change and they probably will. Today, if you don't have a house and you want one, I would say, and I'm going to say outside of a car in reason, I would say, okay, do you have debt? Yes, don't get a house. You should be debt. You should be getting rid of debt. That is the great equalizer. That's the thing right now. So to me, the housing market is so untrustworthy. The key right now is don't have debt. I would literally say we've at a point where if you have debt, you should not be thinking about a house, period, at all. Like I said, unless it's a car payment that's reasonable, $1,000 car payment. Nah, you don't need to be thinking about it. But you have a reasonable car payment, nothing else, no credit card, no student loans, anything like that. For the average person, because some people, the income is going to change that. But for the most part, this is the point where you should be focused on just getting out of debt. That way, as the housing market changes, you're most poised for it if it goes up because you don't have debt. And then if it comes down, you're in good shape for it. So I say that because you can't control the housing market. What you can control is your debt. Pay that off. Get that paid off. I think that's more important now than ever. So that's my take.
Hey, Tim said, which part of Dave's advice you want us to take? You want us to take the 8%?
No, just the date. No. Just the debt, not date. Just the debt. I'm talking strictly the debt pay down. I'm not talking about investing and you getting your percentage, getting those percentage of returns.
Well, Carol Madrip says she offered a little bit over ask, but the house was deeply discounted, right?
Right.
She found the sweet spot where both people can win, and that's the key, So our conversation today has been rooted in. Let me make sure I show this right here. Yeah. So our conversation today has been rooted in just the ideology of, I don't know if we have enough information to really listen to what the news is saying, but how convenient is it that the news was announced last week that there should be like the mortgage rates should be coming in for landing while at the same time giving us a timeline of next year, mid next year, when it's actually going to happen. So I don't know if we can count on anything. And if it hasn't happened, it doesn't matter. And it is an election year, like one of the fellows said earlier. So going into an election cycle, everyone's going to be throwing barbs at each other. And we really don't know what's going to happen. But we know one thing, it's going to be messy. So appreciate y'all for coming through. Enjoy the conversation. If you're checking this out in the replay, leave a comment. Check out The Intentional Millionaire. His channel's in the description. Check out Perry Unlikely. His channel's in the description. And both of those brothers, are real estate professionals with plenty of experience out here in the space with $1 million worth of assets under their own management. So appreciate you for coming through. I'm Sim Sia. And until next time, peace.